to type in your questions as part of the chat feature, and then we'll try to take some questions at the end. So as far as the agenda for today, we have an hour with you, and so thank you again for joining. We're going to first hear some introductory remarks from Kathy Mann, President and CEO of Inclusiv, and then we're going to have a facilitated discussion, which will be moderated by Angela Morrison from Meredith Credit Union. We'll be joined with Renee Sadie-White, President and CEO of the African American Credit Union Coalition, and Bill Bynum from Hope Credit Union. And then again, if time allows, we'll try to save some time at the very end to take some of your questions. But we look forward to a robust discussion, and I'm going to turn it over to Kathy for a few introductory remarks. So thank you, Kathy.
Thanks, Monica. We have such a great packed agenda for you today, and so glad that you can all join us. I just want to do a real quick overview and sort of ground us a little bit in the landscape of kind of where we are, the critical history in the credit union movement of incredible leadership among African American leaders, creating, forming, organizing, running, and growing credit unions that have historically served such a vital role in actually linking African Americans to access to capital when communities were completely being redlined by banks. So as we celebrate Black History Month this month, we certainly want to highlight the fact that Black credit unions have played an important role, a critical role in reaching underserved members of their communities and of all communities. They have a rich legacy in establishing the economic and financial foundations of Black ownership of land, homes, and businesses. So while there's a moment right now of sort of looking at and appreciating and valuing the importance of financial institutions that are owned and led by people of color, it is not a new thing in the credit union movement. This is our legacy. Dating back to the 1930s and 40s, some of the original credit unions following the Federal Credit Union Act in the 1930s were formed by African American communities that simply felt like banks were not addressing their needs, and organized to create and pool their own capital to be able to build their economic infrastructure and the economic infrastructure of their communities. In 1974, it was Black-led credit unions that were the driving force behind the coalition that came together to form what was then the National Federation of Community Development Credit Unions, and has since been renamed Inclusiv. That leadership was critical in getting what was then the Federation established. They did so because they felt their visibility and voice were not adequately acknowledged in the mainstream industry at the time. And Black-led credit unions and those serving predominantly Black communities remain really the core of Inclusiv's membership base, providing leadership and direction in our program development, our capacity building initiatives, as well as in our capital campaigns. It's important to note that there are today over 500 minority MDI credit unions, minority designated credit unions across the country. And of those, 350 are Black-led and Black-serving credit unions. So certainly the largest portion of not only of the MDI credit unions, but really in the MDI space, that number's far above what you see in terms of MDI banks. So, the Inclusiv research has demonstrated that MDI credit unions are in fact the most financially inclusive, demonstrating not only the highest concentration of loans in economically distressed areas, but also fostering ownership in communities of color. And therefore, credit unions that are founded, owned, and managed by communities of colors and other underserved and marginalized communities are an essential part of the financial services industry and a critical part of the solution. Really are I would say, the fundamental solution to moving to eliminate the racial wealth gap. And we have to do so really, I think, by not just valuing the contributions that have been made in the past, but really directing the resources to help these institutions be able to continue their mission and grow their reach and impact. As part of our commitment, Inclusiv, to providing Black credit unions with our full support, we have created this initiative, Inclusive Black Communities. And as part of this work, we actually will be releasing very soon a report entitled Preserving and Growing Black Credit Unions, Inclusiv's Guide to Building Capacity and Providing Technical Assistance. And this documents a model for providing intensive TA support to Black credit unions and helping to kind of form the sort of business model of the future. As extensive as the history of Black-led credit unions has been in our movement, there has been a historic disinvestment in these critical credit unions. So due to lack of investment and regulatory pressures, many of these credit unions had begun to be forced to merge, be forced to liquidate, or be just sort of pushed to not be, to be made to feel that they could not control their own destiny. And so in the past several years, and with the support of some really, I think, some big picture thinkers, both in the credit union movement and among our bank partners, including Citibank, that helped us first launch this initiative, we've really dug in with some leading Black credit unions to be able to really define the business model for success for them in this 2021 and going forward. So we're so excited to be releasing that guide and to be sharing more about it. And before I turn it over to this amazing panel and to Angela, our fabulous facilitator of the panel, I do want to just make note of, two really critical things. And one is, as many of you have been no doubt hearing from us quite a bit, in December of last year, when Congress passed the COVID relief bill, emergency relief package, part of that was an allocation of $12 billion for Cdfi and MDI institutions, right? So community development financial institutions and minority depository institutions. Of that 12 billion, 3 billion is going as an appropriation to the Cdfi fund. We are working overtime trying to get everybody who could possibly be eligible to make sure they get certified so that they can take advantage of that up to $3 billion worth of grant appropriations. So this is a good time to return our calls. If we're reaching out to you saying, hey, get certified as CDFIs, there's a lot of resources available. There's also going to be a $9 billion treasury facility that will allow for the investment of secondary capital. And that is for MDIs and CDFIs. There is a huge priority on capital going to minority depository institutions. This is the year, this is the moment for transformation to happen. And we're so excited to have so many of you on the call today, so many of you participating in our programs. And we're so excited to hear from this fabulous group of panelists to talk through a little bit more with us, sort of the opportunities and the impact and the future of Black-led credit unions in our movement. So thank you so much for joining. And with that, let me turn it over to one of our fabulous board members, Angela Morrison, who is the Community Development Manager at Meritus Credit Union and has been a really valued member of our board. So Angela, why don't you take it away?
Thank you, Kathy. I appreciate that, those comments. And yes, the stars have aligned this year for our credit unions across the nation, but we all need to take advantage, especially our minority deposit institutions, to be able to do this transformation. Let's take this pivotal time to be able to help more people in our communities. But I'm so proud today to be a part of this discussion and to actually be able to facilitate the discussion. I do think we're having a few little technical difficulties in regards to Mr. Bynum being able to join. I believe, Monica, we will need to make him a co-host, as you did for Renee and for myself, so that he can actually participate fully in the discussion. But I want to go ahead and get us started, though. We have some great opportunities to share with you today. And I'd like to start with you, Renee. Can you just tell us a little bit more about the African American Credit Union Coalition, you know, the origin, who it serves? Kathy talked about how this whole movement, especially the National Federation of Credit Unions, was founded by minority credit unions. So please tell us about the coalition.
Wow, thank you. And thank you for allowing me to be here. As everyone knows, I say it all the time, Kathy is my shero. So anything for Kathy. ACC was founded almost 20 years ago, co-founded by Sheila Montgomery. And it's so interesting because she was a past board member for both of our organizations, Inclusiv and ACC. And it was a group of Georgia credit union professionals, CEOs and board of directors who were coming back and forth to the GAC, the Governmental Affairs Conference that CUNA puts on. And they were giving what we call the nod. They'd see a Black person and you'd nod. And every time you walked around, you saw another Black person, you give the nod. And so they finally got tired of just giving the nod and they started getting together. And so year after year, they came together at a restaurant called Hogate's. And so Pete Creer was very instrumental in making sure that the organization became a formal organization. So after a lot of discussion and fighting about what should we name it, they decided to name it the African American Credit Coalition. Shortly after that, I got tapped to join to help write a grant for the Reaching Toward the Future internship program. So I came along, and I like to say that the founding board members of the ACUC, they had the baby and I've been the nanny. And Sheila said, you can't say nanny. So I'll say, I was the governess. I've been the governess for quite some time. And so having this vision, this great broad vision of making sure that the unique perspective of African Americans were included in the credit union movement, that's why we were started. So that's the history of ACC, a little history of that. But we've gone on in the last 20 years to provide lots of professional development and advocacy, and certainly supporting when it was the National Federation of Community Development Credit Unions and any other organization that wanted to do social good within the credit union movement. And so now we're serving members all around the country, obviously, and abroad, and in the continent, and the continent. And so what we do is right now we're just really making sure that DEI is heard loud and clear, that it's important, that we cannot forget it. It is not a hashtag, and that it's very important that we help minority development credit unions and depository institutions, that we help the Black-led and African-American credit unions that are helping people of community of color. So that's a little bit about ACC.
You know, networks are so important to build synergy and to be able to share best practices. So thank you for that, Renee, for that background. And I'm sure we are going to have more opportunity for you to share about the coalition as we continue the discussion. So welcome, Bill. I'm in awe. I'm a little starstruck, but I'm excited to be able to ask you, Bill, tell us a little bit about Hope. I mean, not just a little bit, but a lot, right? So tell us about Hope Credit Union.
No, thanks for having me, and thanks to Inclusiv for organizing this conversation. You know, Hope is a community development credit union like other Inclusiv members. We are a Black-owned, a woman-owned community development financial institution. We have a affiliate that's a loan fund and intermediary 501c3, and we have a policy arm, the Hope Policy Institute. Together, Hope Credit Union, Hope Policy Institute, Hope Enterprise Corporation. For the past 26 years, we've been working to try to make sure that where someone's born, what their race is, their gender, and does not determine their ability to support their families and to contribute to their community's economy. We know very clearly that at some point, climbing the economic ladder requires that people have access to financial tools. And so that's what we've been doing. initially as a loan fund, but when we found it was clear there's not enough bank CRA money or philanthropy in the Deep South where we are based to support the needs of the communities that we serve. We built a credit union that had started at a church as a volunteer project to address predatory lending in a low-income community here in Jackson. Eventually we knitted the credit union and the loan fund together and have been busy ever since. We're in the, often say we're in the blackest and the poorest part of the country. And people in this region are unfortunately on the outside of the economy looking in too often. And so we're glad to be in a position to help close that gap by providing a full menu of financial services, from business loans to small mom and pop entrepreneurs to large community facilities, projects, mortgages to first-time home buyers. Almost 90% of our mortgages go to first-time home buyers, to business loans. We started as a business lender. I talked about business lending, but also the just making sure that families have consumer loans, have loans to get out of payday debt traps. And I think almost more than half of our members either didn't have a bank account before they joined the credit union or were dependent on these financial predators before they became members of Hope. So we stay busy, just like so many other CDCUs, particularly minorities community development credit unions do as first responders in the most distressed communities.
Thank you for that information, Bill. And I know that, Hope Credit Union, along with other credit unions like yours, have been advancing racial equity. But let's talk a little bit more about the media coverage that Hope has been getting recently because of your partnership with Netflix and others. What are ways that the private sector, particularly banks and corporations, may be able to work with Black credit unions to maybe help to do even more to equalize the playing field?
The Netflix deposit and other deposits from significant corporations came about, I think, with the awakening that so many people in the country have been exposed to over the past year. George Floyd's terrible murder, I think, made people step back and see some for the first time what so many people here in the Deep South and in communities of color across the country have seen, that there are disparities. There's systemic disparities, whether it's in policing, but certainly in the banking service, in the banking industry. Federal Reserve data shows that people of color just are not there in bank because they don't trust the traditional financial system, because they are not respected and welcome in traditional banks or credit unions for that matter. And we have tried to fill the gaps. Unfortunately, we also know that our communities are disproportionately under-resourced, just like Black credit unions and Latino credit unions, Native credit unions are disproportionately undercapitalized relative to our peers. Our policy team did analysis and showed that, looking at Cdfi fund awards, showed that Black-led and owned Cdfis were undercapitalized 2.5 to 1 compared to our non-white counterparts. And so there are disparities in capital access, not just for the people that we serve, but for our institutions. And so fortunately, Netflix recognized that Black financial institutions play a critical role in closing gaps and extending a lifeline to the most vulnerable communities, and approached us about the idea of investing in Black depositories. And we were excited to be the first direct investment that they made in a Black credit union. They made a $10 million deposit, what we call transformational deposits, because it is transforming the communities where we work. It's priced at 10 basis points and essentially stands in the place of core deposits in places like Itta Bena, Mississippi, where we have the majority deposits in that community. But if we had every deposit in Itta Bena, which is where Mississippi Valley State is housed, and where we hosted Jay Powell in a forum, the Federal Reserve Chair, last a little over a year ago, to help him see the importance of closing gaps in places like the Delta and Alabama Black Belt. But if we had every deposit in Itta Bena, it'd only equate to $1.2 million, which is barely enough to address just the housing needs, not to mention the business needs, community facilities, just getting people basic financial services. So a $10 million from Netflix is equivalent to, to 8 or 10 Itta Benas. And so it was really important, both in capitalizing our work in these communities, but also in making a point to the rest of the world that these places are worth investing in.
That's so important, and here I read an article this morning about after this year of the pandemic and other things, that credit unions are really going to be put to the test with credit scores and risk-based lending. So, there may be an opportunity here for credit unions like Hope Credit Union and other African-American-led credit unions to show that this work can be done and done well. So with that, Renee, tell us a little bit more about the credit union movement industry and how working closely with Black credit unions, specifically, how can white-led credit unions and other non-Black MDIs work with Black credit unions or better serve their Black community members? And again, with what we're going through, there's some opportunity for Black credit unions to teach non-Black credit unions how to work with underserved markets.
Well, the first thing I would say is to join the Commitment to Change Credit Unions United Against Racism initiative, right? Because we want to eradicate racism. And I think that it's most important that you have people who look like the people you are serving in upper management. Oftentimes, the credit unions don't have anybody who can give them information, who can give them a different perspective. We had someone who wants to do some social good, and they approached ACUC, and they talked about a certain product that they wanted to offer. And so they hired someone to do a psychological analysis of how a certain group of people spend their money. And the first question I asked was, well, was that financial psychologist Black? And they weren't. So it's like you're missing the mark again. You want to help, but you're not asking the right people what their experiences are. So I think that the white-led institutions, thank God, we have many who come to ACUC who are looking at how they can proactively change some things. And so our corporate partners, they are really making a difference by putting the resources where their money, where their mouth, what they say they want to do. Yes, we're going to do this with you. They're looking at how they can create products and services for what I call the colored majority. I no longer say minority because colored people are not minorities. We're not the minority, we're the colored majority. And so when you look at that and you own that, you can see how you can help. You can see how you can make a difference. With ACUC, and I love to say this, we're inclusive, not exclusive. And so when you're looking at, we're not just about Black people, we're about all people. But because there are so many concerns and there's so much of a gap, a wealth gap, how do you change that? What do you do? So we've created some programs that help people. We have a cross-cultural mentoring program. And so we're looking at how you can learn about different cultures so that you can understand how you can serve. You can understand what to do better. I admire CUNA Mutual Group for a couple of reasons. When they realized that they had a misinformation about communities of color and how we pay our bills, they changed up. Their first thought was that we didn't pay our bills right, or we didn't have money to pay our bills. That wasn't the case. They didn't have a product that the only way that they sold the insurance was to do a direct debit. Well, oftentimes communities of color, they don't want their money to come out because they're watching their money very closely. They go get money orders. And so they redirected how they're doing things. And that's what it takes. It takes an open mind. Can you see that you want to do things differently and really mean it? Oftentimes, people will say, we want to help you do social change. We want to help you do something different, but they only want to do it their way. If you're only going to do it your way, you're going to get the same results. So you have to be open and have people at the table that can give you a different perspective. And I think that being very open to the discussion and not getting sidetracked or their feelings hurt because you're hearing something that's uncomfortable. Sometimes you have to have the uncomfortable conversations. And so those who are on a DEI journey, if they're really open and they want value for what they're trying to do, that roadmap, they have to get a thicker skin. So I think that the credit unions that want to help the communities of color, that they need to just really have someone that they can talk to, that they can trust, have these conversations that can be uncomfortable, but also look at and hear from the people who know the people that they're dealing with. And I think that that's the most important thing that these white-led institutions can do.
That's very helpful because, there's so many times that, like you said, the discussion is very, people have a tendency, they want to be, I don't want to use the word politically correct, but, the whole back and forth about what's appropriate, what's not appropriate. But you're so right. I love that example that you gave about CUNA Mutual, and how they had to change up their practices to be able to better meet the needs of the community that they wanted to serve. So why not have the people you want to serve at the decision-making table, right? You start there and then it goes from up and down, up and down. So Bill, tell us a little bit more about collective advocacy work. We're able, Inclusiv and led the charge along with other credit union coalitions. And some of us on the ground floor, we helped with calls to our congressmen and everyone. And so the $12 billion, bipartisan bill was passed for CDFIs and MDIs. But this underscores the importance of advocacy for credit unions. So 2 questions have come up as a result of this. How do we ensure that Black credit unions or the colored majority credit unions are not left out of the recovery efforts?
I think part of it builds on what Renee just mentioned, and that is we've got to have more people, not just people of color, making the case for a country that works for everyone. The truth is, while the country is becoming majority Black and brown, it is taking people a while to get comfortable with that notion. I'm working in Mississippi Delta, and one of the communities that we have built housing in was built outside of the city limit so that the Black people couldn't vote in the municipal election. And that's within our lifetime. And there's still a lot of resistance, as we have seen over the past several months, a lot of division about the direction that the country's going. But regardless, it is becoming a majority Black and brown country. It's not in any of our collective interests to leave so many people on the outside, under-resourced, undereducated, without adequate health care, without adequate housing, without the ability to contribute to the economy. So first and foremost, we've got to keep putting the data on the table and making sure that people see that everyone benefits. If the economy is working better, we all win. But it's not going to work if we leave so many people behind. And quite honestly, Black folk, brown folk aren't going to be, our voices aren't going to be enough. We've got to have other people who understand that it's in our collective good making the case. Unfortunately, we look at our brother credit unions, brother and sister credit unions and banks, and you do not see people who represent the community in the governance, on the boards, in the C-suites, making the decisions. And so you get gaps in credit. We all have blind spots. We make better decisions if we have more people around the table. I was really proud and incredibly impressed to be a part of the Biden-Harris transition team. And everyone on that team, from volunteers who are going to go back to our day jobs to people who are nominated for cabinet positions, had to go through diversity training. This is Janet Yellen, had to go through diversity training. And it also was clear that if everyone in the room looked like you, then you need to go back and bring some more people into the room. We make better decisions when we have more data that represents the communities that we work in. And that's really critical. And I think we were able to do that as a part of the advocacy for the $12 billion, actually it's $27 billion. There's $9 billion for minority depositories, there's $3 billion in FA funds, community Cdfi funds. There was another $15 billion for CDFIs for PPP lending. And so this is an incredible time for mission-driven organizations. It wouldn't have happened without credit unions like the members of Inclusiv bringing the stories of our members to the policy tables, showing them what a difference it can be made by making smart policy and program decisions. We've got to take those to our fellow credit unions. Here in Mississippi, our policy team did an analysis of Cdfi banks and showed that mortgage lending by 10 Cdfi banks in Mississippi to Black borrowers is less than non-CDFI banks in Mississippi, and they've gotten federal resources to make sure we level the financial playing field. But unfortunately, a lot of CDFIs became CDFIs after the financial crisis, got TARP funds and used that to shore up their balance sheet, not to deepen their impact in communities of need. And so I really think that in addition to celebrating the resources that have been made available, it's up to us also to hold those policymakers accountable, including our friends in the Biden-Harris administration, whatever side of the aisle you're on. Accountability is key. We cannot let these historic resources go wasted. And if we don't make transformational change at this time, when people have acknowledged the systemic disparities that led to George Floyd's death, that has led to so many people of color losing their businesses as a result of this financial crisis, we're never going to make the change. We've been dealing with these challenges for 4 centuries. And, if we don't take advantage of it now, when we have so much collective pain and so much awareness of the disparities, we're never going to do it. So I think now's our time to jump on the table, use our collective voices to make sure we move the needle on these issues.
And with that, Bill, wouldn't you say it's very simple to do by, don't wait till you have to react to something, that we start to build those relationships now with our representatives in Washington, D.C. that are actually having the vote. I know it was easier for me to be able to send a note to Senator Cassidy when the time came, because I'd already begun to talk to him about the work that we're doing in Acadiana, in Louisiana. would you, I mean, you were invited to be on the transition team, and congratulations for that. And I thank you for that, because when we put our voice to decisions like that, then we can actually bring those experiences to them. But I believe that might be a good way for people to start now. And so when the time is right and Kathy sends us the email and says, can you contact your legislator, it's easier to do.
No, absolutely. I think we all have roles to play, and I think when you see a problem, you got to deal with it. Pick up the stick and get it out of the way. And pick up your shovel, move the dirt, and it's going to happen one vote at a time, one conversation with a policymaker, or in corporations. Let's not. I think about policy broadly. It's about how you influence resources that affect your community, public, business, banks. And quite honestly, I was pleased that the Business Roundtable restated their statement of a purpose of a corporation, an economy that works for all Americans. Great, they did some really important work. Several banks have made multi-billion-dollar commitments. That's great. Let's make sure those commitments hit the ground in the communities that need it most. They're good headlines, but let's, and that can't be done unless we engage them, take the data to them as policymakers. And if they don't use the services. Martin Luther King was in Memphis before he got murdered, fighting for the sanitation workers. And he told them, if you need to move your money into a bank that is going to meet your needs. So you got economic power. That's what the boycotts were about. Use what power you can to get your policymakers, the business leaders' attention. And I think that's how change takes place.
Yeah, so that's a good way for us to begin to overcome regulatory barriers. Some of the things that I've heard from some of the white-owned credit unions and even white-owned banks that I get to collaborate with here in the area, whenever we're talking about some of these issues, the first thing that's kind of brought up is that regulatory barriers keep them from collecting data on demographics. So there's a gap, not being able to share what the gap is between data. So, how do we overcome that in those discussions? Renee, Bill, either one of you.
I'm gonna let Bill take that one.
Yeah, I'm always concerned I'll get tomatoes thrown at me when I speak in front of my fellow credit unions. We choose to be credit unions. We choose to take advantage of federal insurance and to be stewards of other people's money. That comes with certain responsibilities. We saw what happened during the financial crisis when the rules were too lax. The has very low cost funds, and fortunately credit unions plow those benefits back into our communities. But I think there should be a reasonable expectation that we should be held accountable, and reasonable regulations are part of it. I think CUNA does some good things, NAFCU, but a lot of our trade associations use regulation as red meat to rip up fervor among their members. All regulation is not, regulation is why they exist. So I think we need to be reasonable about what is and what is not appropriate regulation.
Well, I know that would be a great topic for another webinar in the future, Monica, if you want to consider that. But Renee, let's talk a little bit about what's on your mind regarding recent trends involving Black credit unions. Is there something that you'd like us to really reflect on today and take with us?
Yeah, so when thinking about that, again, as you know, Kathy Mann is my shero, and she, along with Rita Haynes, Sheila Montgomery, Pete Creer, Michael Hale, Bert J. Hash Jr., oh my gosh, Bill Porter, and Helen Godfrey Smith convinced me a long time ago the need to make sure that we support African-American led credit unions and African-American credit unions that help people of the community. My concern is that MDIs and smaller credit unions, the need for sustainability and compliance. At the same time, the pressures to implement new technology represents a growth opportunity more than it represents a threat. And I don't think we see it that way. However, many NDIs and smaller credit unions, they simply don't have limited staff resources. So I keep trying to get to that right corporate partner that wants to make such a huge difference. Fiserv maybe, Co-op maybe, Visa maybe, that we do something like a shared branching. How can we help these smaller credit unions have one system? The way that State Employees Credit Union of North Carolina is run, they have one model, but they have this large base. What if we replicated that? How would that be that we could do that for the smaller credit unions so that they wouldn't have to worry about their back office? If they were able to have the free clear of mind to just service their members because their back office was taken care of. So Kathy and I haven't figured it out yet, but that's on our to-do list.
Sorry, I had put myself on mute. Thank you for that, Renee. So to both of you, what do you think is on the horizon for Black credit unions? I mean, we've talked a lot about it, about what we'd like to see happen, but what do you personally think about what's on the horizon for the Black credit unions?
I personally think that we are going to be better. We're going to find the solution. People are finally interested in, and I think we turn that around. Put your money where your mouth is. Let's get the partners together. We're smart people. Let's make it happen. And I think that there'll be enough people who step up. And, you know, like I tell Kathy, nobody tells me no. So if I start knocking on your door, be ready because I'm coming for you.
Very good. Bill?
Yeah, I agree. I'm reminded of one of my early founding board members talking about people in the Delta, and he said that people in Delta can do anything as long as they have the tools. The same is true of Black financial institutions, Black people, Black communities in general. Unfortunately, we have been, wealth and resources have been extracted from our communities, from our organizations. I think now, hopefully, more people are recognizing that is not in the best interest of the country. We've got to equip people to be productive and organizations that serve them. And so no one does that better than minority financial institutions in the most distressed communities in this country. And so I think now is our time. Again, if people don't recognize that, let's provide the data. We've got millions of stories of what happens when you give people equip people with the tools that they need. They support their families, they build communities, they strengthen the economy, and we need that as a nation more than we ever have.
Well, to that point, I want to say, Kathy, thank you for the guide that Inclusiv is developing or has developed to issue out on how to fortify Black credit unions. And so I look forward to reading that myself so that we can actually employ some of the best practices here at my white-owned credit union.
Well, I would love to take credit for that. Monica Copeland is our hero behind that, or shero behind the development of the guide. She and the team. There's a fabulous team at Inclusiv, including Andrea Lawley, Pamela Owens, Ann Solomon, and many others, Bernice Arahan, who have been out, Deborah Boatwright, who've been working with numerous of our members initially in New York and Chicago, and really kind of digging in. And frankly, it was the credit unions themselves that have been designing the models for their future. And it just goes to show that taking the time and being able to resource a process of really sort of being able to step out of the day-to-day and think about what makes for the future, it yields incredible amounts of really great focus and direction. So that the 24 plus credit unions that sparked it off in New York and Chicago really did a lot of that hard work. And now we've got sort of a good guide of, how do you take the time, step away, use this moment where resources are coming down the pike to think strategically about not just how am I going to survive, but where's the future? How am I going to use this moment and take it and transform what we can do in our communities?
Very good. Well, we have about 10 minutes left for the webinar. Monica, how can we go about getting some questions that maybe the audience?
So thank you so much, Angela and Renee and Bill and Kathy, for all your great comments. We are going to open it up for questions. A couple have come in already, so I'll go ahead and read those. But if anybody else has any questions, I'm going to open it up for you guys to sort of take a moment to ask those in the chat. But one question came in for Bill. The question was, we've been told that there are not sufficient deposits to support local bank branches in minority communities. Can you address this? So I guess it's a question, about maybe, Black and brown people not having the resources to warrant additional branches and things like that. Can you
there is some truth to that if you just look at the wealth, at the resources that have been allowed to stay in those communities. But as I said earlier, wealth has been extracted from communities of color. They've not been allowed to grow in communities of color. And so that's why so many Black and brown communities are economically distressed. And so we've got to import capital into these communities. Certainly we want to put people in a position to use their own resources and give them a place where they can transact business in an affordable, responsible way. And no one does that better than credit unions. But you can't, you can only work with what you have. And as I mentioned with the Netflix deposit, it imported capital into the communities in the Delta and the Black Belt and across the Deep South where we work. And I think that's what has to happen. Let's talk about repairing, reparations, if you will. It's not exactly returning the funds as equity, but it is putting the funds that have been extracted from these communities. Black folk use a lot of Netflix. We particularly over the past year, as everyone else does. We are consumers, and these businesses, these banks, benefit greatly from our spending and our labor. And so it is right that they reinvest in these communities. And so deposits are one way to do that. I think these deposits should be accompanied by capital, by net worth. I think every deposit that the JP Morgan Chases and B of A's make in these communities should be accompanied by 10% of a equity grant, so that these undercapitalized Black financial institutions can have the balance sheet strength to grow and to make the investments that are needed. But so yeah, there's not enough deposits because deposits have not, there's a 10-to-1 Black-white wealth gap. It's 100-to-1 for Black families with children compared to white families with children. And so you can't, it's not reasonable to expect these communities to lift themselves up from the bootstraps, by the bootstraps, when they haven't been allowed to acquire bootstraps.
Thank you. So thank you for that. Renee, there's a question in there for you as well. and you can let me know if you want to take one versus the other. One is what is your organization doing to stem the tide of Black credit union loss in the U.S.? Or conversely, is your organization doing to help grow or increase the number of Black credit unions in the country?
So we're not doing anything to increase the number of Black credit unions. We don't want to lose any more. And so again, as I stated earlier, finding that right corporate partner who wants to help us find the solution to equip those smaller credit unions with the back office necessary to be more member centric, to provide more. Also, and this is going to be a little controversial, and Kathy's not going to believe it's coming out of my mouth. But we need to make sure that the regulators are not hounding our smaller credit unions, that they're giving them a fair break, and that they're giving them people who are going to make sure that they're treating them fairly, respectfully. And so I think as people start doing what they need to do better, that's how we can help. So we're not putting our thumb on the regulators, but we are having conversations. I have made it very clear that I felt that some of our small credit unions have not gotten a fair break with the regulators. And so I've been told that that's going to be addressed. And so that's one of the things that we're doing to help that. Are you proud of me, Kathy?
Can I piggyback on that? I think also we need to make sure that we take full advantage of the $9 billion in the Emergency Capital Improvement Program. That is a once in my 40-year career opportunity to inject capital into these institutions, particularly the smaller institutions. Treasury is now developing rules for that. We need to make sure that those rules prioritize credit unions and institutions that have a demonstrated track record of investing in these communities, not those 10 Cdfi banks in Mississippi that do worse with the funds than their non-Cdfi peers. And that would be an embarrassment and a waste of incredibly valuable resources. So I would say that is a top advocacy priority for our industry. We're not going to get $9 billion put in front of us anytime soon. I would speculate. And so let's make sure we take full advantage of this and hold our friends in the White House and in Congress accountable to putting those resources to work where they can make the biggest difference.
Thank you, Bill. A follow-up question on the Netflix question was just about corporate deposits. One of our listeners is asking, how do you go about getting corporate deposits if it's not in your field of membership? So it's sort of a technical, logistical question, but just that issue of field of membership. And
I know there are limits on non-member deposits. Kathy can probably be more specific about how that can be navigated. But for Hope, we have a broad field of membership, and we are glad to be able to welcome anyone who supports our mission into our field of membership.
Got it. And then a question for you, Renee, about HBCUs. So in the news a lot about supporting HBCUs at this moment. So the question is, how can HBCUs and HBCU credit unions collaborate to bring resources to the communities? And so any thoughts on that?
Lots of thoughts on that. We've got a board meeting tomorrow, and one of the topics is Board Director Gary Perez is looking at launching a digital network for HBCUs, and we're really proud of that. One of the things that Kathy and I have talked about, and Pamela Owens and I've talked about, is how we can get the 10 Black university credit unions together and maybe help them get that back office. Maybe that's the first steps to get that back office. We are looking at, we're partnering with 2 different organizations to create a credit card for communities of color. I call them marginalized human beings as well. But that the reward component of it will go to reinvestment and go to the HBCUs and the HBCU credit union. So I'm really proud of that. Don't know how that's going to work, but I think that it'll be able to bring some financial relief to the credit unions and the universities as well. And imagine if all of the alumni of these credit union these universities got together and pooled their resources. So we're looking at how we can get all these people who have graduated from these historically Black colleges and universities to support their credit unions and to support HBCUs in one way. And so that's what we're doing, looking at how we can do that. And again, it takes resources to get those things going. And so maybe we can write a grant again, find another partner that wants to help solve for that. So I keep saying, let's solve for this, let's solve for that. But there are so many people out here who want to do good, who want to do well, and who need a place to park their money so those resources can expand. And so I wish that we can have more discussions about how we can help immediately instead of it being something down the road, but taking advantage of it now, as Bill remarked about that $9 billion. Maybe we can get some of that to work through these challenges that the HBCU credit unions and universities face.
I'd also encourage folks to go on hbcu.org's website. We've got a couple of tools that I think could be worth exploring. We did a partnership with Mississippi Valley State and Jackson State University a few years ago and developed a HBCU Cdfi economic mobility strategy guide. And there are lessons from that work that we are glad to share with our colleagues, that what we learned, what we're continuing to build on. As a matter of fact, a couple of weeks ago, we announced a partnership with 9 HBCUs, 7 cities in our region, and Goldman Sachs to drive up to $130 million into these communities for paycheck protection loans. And it is anchored with those critical institutions, HBCUs, that are disproportionately located in economically distressed communities. So it's a natural ally for CDCUs, and I just really excited to have them as our partner in closing these opportunity gaps.
Thank you all. So we've reached the end of our session together, but thank you all for being part of it. It's been a really wonderful, rich discussion, and we're just so grateful to have you all as partners. And thank you, Angela, Renee, Bill, and Kathy. I just want to close by saying we do hope to release our guide that was mentioned earlier. It should be on the website, available to all. And then in the next coming weeks, we'll hope to maybe have a webinar on that guide itself. So hopefully that'll provide you guys with some more information. But thank you again, and have
Monica, can I say one last thing before we conclude, which is to the point about the $9 billion, and I saw in the chat a number of folks like Richard Witherspoon out in Pittsburgh saying, I'm going to go for it. I want to encourage everybody to be putting their plans together. Keep us in the loop, because one of the things we're doing at Inclusiv is also building up our own pool of secondary capital. So if for one reason or another something happens and you're not able to immediately get in, but you don't want to have wasted the time in putting together a good secondary capital plan, you can always bring it to us. We will work with you on it. We want to see everybody accessing every single last penny that they possibly can. So lots of work to do, but we're here with you and want to walk this walk with you. And we're just, again, super thrilled by the panelists and by everybody for putting this together. Sorry.
Thank you. Thank you for hosting us.
Thanks, everyone.
Bye.
Bye-bye.
Bye. Thank you.